Building wealth doesn't happen overnight, but with smart investment strategies, you can steadily grow your money and secure your financial future. Here are the top 5 strategies to help you maximize returns while managing risks. 1. Start with a diversified portfolio. Diversification is the golden rule of investing. Why it works. Spreading your investments across various asset classes, like stocks, bonds, real estate, and commodities, reduces the impact of a single underperforming asset. How to diversify. For beginners, invest in ETFs or index funds that track broad market indices like the S&P 500. For advanced investors, explore international markets, sector-specific funds, or alternative assets like REITs, real estate investment trusts. Diversification ensures steady growth and minimizes risk even in volatile markets. 2. Leverage dollar cost averaging (DCA). Dollar cost averaging involves investing a fixed amount of money at regular intervals, regardless of market conditions. Why it's effective. Reduces the impact of market volatility. Ensures you're consistently investing over time. How to implement. Set up automatic contributions to your investment accounts monthly. Focus on long-term assets like index funds, ETFs, or mutual funds. This strategy helps you buy more shares when prices are low and fewer when prices are high, averaging out your investment costs. 3. Invest in growth stocks for long-term gains. Growth stocks are shares in companies expected to grow at an above-average rate compared to their peers. Why choose growth stocks? High potential for substantial returns over time. Often represent industries like technology, healthcare, and renewable energy. Risks to consider. They can be volatile and may not pay dividends. Conduct thorough research and consider dollar cost averaging to mitigate risks in this category. 4. Take advantage of tax-advantaged accounts. Maximize your investments by using accounts that offer tax benefits. Examples: 401k. Employer-sponsored plans often come with matching contributions, free money for your future. Roth IRA. Contributions are made with after-tax dollars, but withdrawals in retirement are tax-free. Health Savings Account, HSA. Triple tax benefits for medical expenses and even retirement savings. Why it matters. These accounts allow your investments to grow tax-free or tax-deferred, accelerating your wealth-building journey. 5. Focus on compound growth. The earlier you start, the more you'll benefit from compound interest, the ability of your investments to generate earnings on reinvested earnings. Example: investing $200 a month at an average return of 7% can grow to over $500,000 in 40 years. How to maximize reinvest dividends. Avoid withdrawing early to let your investments grow. Choose assets with consistent long-term growth potential. Bonus tip: stay consistent and educated. Regardless of the strategy you choose, consistency is key. Avoid trying to time the market or chasing trends. Instead, focus on learning more about investments, monitoring your portfolio, and making adjustments when necessary. These strategies aren't about quick wins, they're about building sustainable wealth over time. By diversifying, staying consistent, and taking advantage of tax benefits, you'll set yourself up for financial success. Start small, stay focused, and watch your money grow.